Matthew Piepenburg, hello.
Hello.
Piepenburg or von Piepenburg?
Piepenburg. Meine Familie kommt ursprünglich aus Deutschland, auf der Seite meines Vaters. Und ich war in ganz kurzer Zeit in ein deutsches Internat angemeldet, nicht so weit von hier in der Nähe von Überlingen. Aber wie Sie haben schon bemerkt, meine furchtbare amerikanische Akzent, ich glaube, dass es besser wird sein, wenn wir uns auf Deutsch oder auf Englisch unterhalten.
Okay, we try that.
Yeah.
Because you are a specialist in markets, you're a financial man. We are sitting here at your office. No, it's the office of Egon
van Greyerts.
No, we know him.
Yes,
no?
yes.
The gold man, but you are part of it. How comes that you... I can show this to the audience. It's a book, no?
Yes, sir.
You've written it together with your partner, Egon.
Yes.
How comes that you joined Egon?
Well, it's interesting. It's a perfectly normal question. Originally, I came to Egon as a client looking to invest in his organization because I'd spent years in risk asset markets in the United States and stocks and bonds and hedge funds and private equity as an investor. And as a family office manager, we had put some of the money it was a Lottogewinn, a lottery ticket in the dot-com bubble with some good friend of mine. We had invested during this NASDAQ bubble in late 1999, this incredible crazy time where the markets just went up and to the right. And then after that, we had some money at a young age that we needed to invest. And I became an investor in other hedge funds. After our first hedge fund, we went from being hedge fund managers to hedge fund investors. And at our family office, we were allocating money to all kinds of investments. And for a period of 10 or 15 years, it was a real Ausbildung, a real education in talking to some of the best and worst managers in the hedge fund or private equity space, and then investing your own money into these managers. It taught you to be very serious about the preservation or the direction of your money. And during that period, with years of talking to some of the best and the worst, I started to have my own Weltanschauung, my own worldview, my own macro view of risk. And inevitably, I thought about currency risk and inflation risk and money printing and central bank policies. And that led to realizing that no matter how you make your money, whether it's in the stock market, whether it's in a private company, whether it's in any investment, if you measure that money in dollars, euros, yuan, pesos, the purchasing power, the inherent Kaufkraft of this money is getting weaker.
So it's like you became a believer. First, you believed in this Wall Street world with the shares and always going up, and the central banking banks, and then suddenly, or after 15 years, you changed completely.
I became more risk aware because the dot-com bubble, which was the late 90s, is when I won this Lottogewinn, this IPO that we had that did really well. It was totally had nothing to do with expertise. It was really luck, but you had responsibility. And then that was 2000, 2001 when that started to blow, and then the bubble popped. And then there was the next bubble, the subprime mortgage, the real estate bubble, the mortgage-backed securities bubble that blew up in 2008. So by this time I was becoming more realistic and cynical about risk management. It doesn't mean gold is the only thing. I still believe in stocks and bonds, but I don't believe in overvalued stocks and bonds. And by the time I was speaking to Egon 3 or 4 years ago, by every metric, in the US markets and in European markets, but in particular in US markets, by every metric, bonds and stocks were very overvalued.
That was clear already then.
Very clear.
It's not just now, it has been then.
It was incredible. Now we're starting to see the slow unwinding of that, very slow. It's a process, it doesn't happen overnight. But regardless of whether markets go up or down, the currency, die Währung, is getting weaker every day, especially.
But people like you, so you joined Egon, and Egon has also given an interview a couple of years ago. You have written a piece last summer, autumn, for the blog, and it was always a little bit the same message. It's going to be gold, the only thing that saves the investor, and all the rest will go down the drain. But it didn't happen so until then. Now we will talk about today, but later on, but just like until recently, the end of last year, we had COVID, nothing changed, gold didn't go through the roof. Why not? It should have happened much earlier.
Yeah, of course. I mean, it's a perfectly normal question. First, there's so many ways to answer it, and we have to answer as many reasons why gold hasn't risen yet, or isn't rising as much as we'd like. But the very most important question is, it's really not important. I know that may sound like an excuse or an apology, but timing a market, whether it's gold or whether it's stocks, whether it's bonds, whether it's risk assets, whether it's junk bonds, whether it's government bonds, timing a market's implosion or Drehepunkt or movement or change is impossible for anyone. Me, you, Egon, the central banks, anyone. You can be prepared for these changes. When I was looking at the dot-com bubble, when we had this IPO that made us overnight millionaires in our 20s, which was totally ridiculous, and even I knew that was ridiculous. No one knew when that was going to end. You just knew it was too good to be true. It was too overvalued by PE multiples, by book ratios, balance sheet ratios. Fundamentals made no sense. And it was the same thing by 2008 with the mortgage-backed security markets. You didn't know it was going to end in September, October. No one knew Lehman was coming or there was going to be a crash in the mortgage-backed security. It just was overvalued and it felt surreal. It's the same thing now with stocks and bonds. No one knows exactly when or how they're going to blow. We can talk about the things that we're going to make them. They're very small Schlüsselindikatoren. There's key indicators that we can follow. It's the same thing with gold. There are a lot of things, there are a lot of reasons right now with inflation, negative real rates, concern about geopolitical risks, central banks losing credibility. It's the perfect environment for gold. Why isn't gold at 25, 23, 2400? Why not?
Where is it now? 18? No, it's still
it's trapped
19.
In this range between 1800 and 2000. It's not breaking past its highs from 2 years ago.
It's not bad, but
it's not bad.
If people believe in your view, then it should be somewhere else.
And what I will say to that is, in 1989 when the Nikkei crashed in Japan and it lost 80, 90%, and that was 30 years ago, over 30 years ago, that market has never recovered its previous highs. But I remember in Tokyo in the late 80s, the expression was, it's never going to die. If we're all crossing the street together, how can we get hurt? And there was this idea that markets won't die. It's the same way gold's not going to rise, but when it breaks, but nobody knows when.
Well, but it has broken in 87, it has broken in 2001, again in 2007, 8, 9. We had some slight crashes in between until now, but it has always recovered in the Western world. Japan is a different thing. I don't know. Japan is a little bit, they really buy their debt, no?
The markets have recovered. The markets have recovered because as long as there's liquidity, markets go higher. When the cost of debt, when interest rates are low, markets go higher. What we've done is we've bought the greatest party on earth. It's the greatest bubble I've ever seen. More than the dot-com, more than the subprime. So, it's like a hangover. We've just we've just postponed it. But the hangover is coming, and
by pushing the interest rates further down until into negative territory.
Exactly.
That was the name of the game.
Think about it, and we got to get to the gold question because it's important. But if it's something's too good to be true, even a 10-year-old knows it. If a government tells you we can solve a debt problem with more debt, and the way that we're going to pay for that debt is with money printed, off der Luftschaufeln. If we're printing money out of thin air, we're going to use that money to buy our own debt. We use that money to buy the bonds to keep the interest rates and yields down. Well, that's too good to be true. Of course. How
was it possible that it worked so long? That's my what I don't understand. We have been talking about that for years, no?
Yeah.
And you have to have a strong stomach to believe in your views if something lasted so long while it's written on the wall. So how was it possible?
Well, first, on the positive side, people trust the experts. They trust they trust their central bankers. They trust their Geldpolitik. They trust their Regierungs, their Staatsregierung. And that's actually innocent and sweet and almost sad, because my view is central bankers have had criminal mismanagement of monetary policy in the last 50 years. Criminal? It's negligent.
What is criminal? That is a tough word.
For me, criminal means mit Absicht, intentionally. If it's nachlässig or negligent, it's just because they were driving a little silly. But when you do something absichtlich, that's kind of something negative. To print and call that a solution, to me, that's clearly, intelligently, intentionally known to not last. It can last. I use the crude analogy, you can have a party and you can drink martinis and you can postpone the hangover for years if you keep providing the liquidity, keep providing the martinis. But you can't postpone the liver damage and the kata, the hangover that's coming. And that's what they've done since 2009. And so that has bought immense amount of risk asset inflation in stocks and bonds. And again, I want to get to the gold question, but it goes to this idea that yes, you can keep this unbelievably high, record high markets in the stock and bond markets, but it's unhaltbar, it's unsustainable. And the reason gold for a number of years wasn't reaching new highs is for the opportunity cost. You could make far more money in stocks and bonds than you could in gold. You could make more money in Bitcoin, which in my opinion is just a tech stock because it tracks the NASDAQ. And we've seen Bitcoin's behavior in the last 6 weeks, 6 minutes, 6 days.
It correlates much more than everybody has said before.
Much more fragile. To the gold price, it's more anti-fragile. No, it's not ripping to the moon, but it hasn't fallen nearly to the pain levels of cryptos or stocks and bonds.
Is it still that the governments manipulate the gold price? Is that
Absolutely.
true?
Well, that's one of the answers, and everyone's heard this before, and their eyes roll. But you have to understand that in the over-the-counter forward contracts futures market in the U.S. and all over the world, there are about 8 or 9 bullion banks under the BIS whose job is to daily put a boot to the neck of the gold price, the paper gold price, by using leverage. So that you may have thousands of long contracts in the paper price of gold. You only need 5 or 6 levered banks to be permanently shorting the gold price in the paper market, and that keeps the price of gold down.
And what is their interest?
Their interest is when they see gold going too high, it's a Peinlichkeit, it's an embarrassment to the yen, the euro, and most importantly, the world reserve currency, the US dollar. If gold goes to $3,000, $4,000, $5,000 tomorrow, faith in the dollar, the world reserve currency, ends.
So it lets them shine very weak. You see suddenly the weakness of the other currencies. That's what you say. It puts shame on them.
It puts shame on the dollar, the world reserve currency. It puts shame on the euro. That's one clear reason. The other thing that we're seeing, that's one explanation why gold isn't going to its natural, it doesn't have natural, supply and demand, Nachfrage und Angebot. It's künstlich jetzt, it's artificial. So you don't have natural supply and demand. The other reason right now we're seeing specifically, I think last year people didn't think inflation was going to stay and they didn't get scared, so the gold price wasn't on. Now inflation is clearly nicht vorläufig, it's not transitory. People understand that now too. So why isn't gold rising? The next trick from the US between Janet Yellen and Jay Powell is to raise interest rates to fight inflation. And as interest rates go up in the US or in Europe, but especially in the US, temporarily, the dollar gets stronger. When the dollar gets stronger, gold isn't as sexy. It's
and
not
why
as
not?
attractive.
That's always the saying. No, if the dollar is rising, then forget about gold. Why? I don't understand this.
The idea is that gold will really make its biggest move when faith in the dollar dies. And how do you measure faith? How do you measure the end of the expiration date of faith, especially when you have central bankers, well-dressed, articulate from the best schools, promising you, don't worry, we have this, we're going to take care of this. That's very human, normal psychology. And truthfully, the Fed and the ECB and the Bank of Japan, and they're powerful institutions, and they can keep buying the markets by printing money. And so, but how does the dollar stay stronger? It's only stronger on a relative basis, relative to other currencies. Its inherent purchasing power is getting weaker. And investors of gold know that. Regardless of where the paper price of gold is, they know that.
Okay, but you're talking your own book, of course, because you are in gold, no?
Yeah.
And you're always also talking as a very profound financial specialist, you know the markets. But doesn't gold have something a little bit esoterical? You know what I mean? A little bit. Come on, where is the energy in gold? It's just like it's that material. No, we should have something more dynamism. At least the tech stocks. I mean, they represent. Google is a wonderful company. Apple makes wonderful machines. No, so why does a person like you in the midst of its life buy that gold story and sell that gold story?
That's such a, it's like Warren Buffett. Gold it's a barbarous relic. It sits there and stares at you. Pay a fee to watch it sit in the ground. It does nothing for you. Tech stocks are changing the world. Totally agree. It's not sexy. It's not fun. And crypto looked like the new, using blockchain technology, which I think is fascinating. This new idea, then in the new world, you can talk about 18th century France, ancient Rome, England, all these countries that needed gold. Well, now we've got crypto. And we now have this new technology, this new important thing. Gold is just a relic of the past. And it's so boring. But what people don't remember is gold is more than boring. It's simple. And like a Chanel dress or a glass of water or a baguette in France, sometimes simple is basic and better. And what's sexy about gold, and it's hard to see when stocks are going up and Google and Amazon and Twitter and Zuckerberg are getting the headlines and Elon Musk looks like the next savior, is that despite all this going on, this simple little thing called gold keeps money honest, and money is not honest anymore. And it always will be, and always has been, and is right now, keeping the price of money or the value of money honest. It is, like I said, a chaperone at the party. If you don't have a chaperone, money gets printed and devalued.
It's a nice picture, no? Honesty, gold is honest. There is also another picture like gold is money, the rest is debt. No, so the only money is the only real money is gold. But why? Why? I mean, I have money here. Normally, it's virtual now. It's on my handy, but doesn't matter. I can buy whatever I want to. So where does that come from? That only gold matters and the rest is debt. I mean, I understand the concept, of course, but in real life of the people, I don't think that they really argue like this. For them, gold is something for the rich people and a little bit the ones who always fear something. That's why they put it into the Gotthard Massiv, into a vault.
Right. No, of course. And, well, think about it. You're right. If I have a bar of gold right now and I go get groceries, first of all, it's not practical. What am I going to do with a bar of gold? Second of all, who can afford a bar of gold? If you're a normal person, you're not a billionaire tech stock owner and you have no ability to buy bars and bars of gold and store it in a vault. I understand that. So what do you do with gold? Again, barbaric relic. But think about gold beyond just as an investment or as insurance for money that's already dying, because that's what it is. And regardless of whether you can buy a coin or a 400-ounce bar or a kilo bar, you can still protect yourself. But regardless of whether you privately own gold, when a country has a gold currency, like America did post-World War II, the Bretton Woods Conference, 1944, before the war was even over, the US dollar was backed by gold. And therefore, the US dollar was trusted. You didn't need to have gold in your pocket or in your checking account. If the dollar was already backed by gold, you could trust the dollar. Because that dollar said, I am backed by something real. I can't make too money of them. I can't repeat myself or reproduce myself unless I have enough gold to support it. When Nixon took the gold standard away, less than 30 years later in 1971, now what the world and Nixon was saying without saying it out loud was, this dollar no longer has a chaperone, it no longer has a governor on its engine, it no longer has any Selbstbeherrschung, no control. Now we can create as many as we want, and it won't feel as valuable. It doesn't have that gold backing, invisible gold backing. So it actually is, meaning since 1971, for die letzten 50 Jahre, the last 50 years, that dollar, whether it's in a checking account or whether it's on your portfolio statement or whether it's in your real estate price, has less power, less trust.
It has
less
become
value.
this famous paper money.
Paper.
It's paper instead of gold. I understand this. That's why now we jump into the actual situation. We have a war in Europe, in Ukraine. Russia has attacked. I mean, could you imagine such a thing?
No, it's unvorstellbar. Es war vermeidlich. This war was avoidable, for one thing. And that's a political opinion. I don't think maybe people want to hear a political opinion, but Putin for the last 8 years has said if Ukraine goes into NATO, that's going to be war. And the State Department in the US knew that for years. Even in America in 1963, Kennedy said the Russians can't have missiles in Cuba. That means war. You can't have a Ukraine in NATO. We knew that. And knowing that, what did we do? We sent Kamala Harris, which I don't care if you're left, right, or center. She wasn't qualified to negotiate a peace with Putin. And rather than come there and seek a settlement, she basically pushed for more NATO and more Zelensky in the Ukraine and NATO. That doesn't make me pro-Putin or pro-China or anti-Zelensky or anti-Ukraine. I'm saying that was an avoidable war.
But Ukraine didn't go into NATO. Not yet. I mean, it was not part of the NATO.
Not yet.
So why should that be a reason for Putin to attack a country?
Again, that's more of a political question, and I agree. And I did an interview with Jan Kneiser. I didn't think it would happen. I didn't think they'd go to war over this, even with Putin or whether it was NATO or whether no NATO. I just didn't think it would be happening. I didn't think it was worth it. But clearly, I think Putin, in his opinion and his group, thought it's inevitable. It's unwiderstehlich. We can't resist this. Let's make a move now. But that's just a political opinion. What is interesting about the war in Ukraine, because now it's a fait accompli. It's already happened. What is interesting, what I think is I think, and Grant Williams, one of our advisors, said this recently, what happened in February of 2022 was more important than what happened in August of 1971 when Nixon took away the chaperone, the gold standard. Because what happened in February of 2022 is not only when Putin did this war, we're all against war, we're all against violence, we're all against the death of innocent civilians, we're all against the chain of events that are happening. But regardless, that was a terrible day for the West in a financial way. Because the sanctions from Germany, from the US, from even other nations in Western Europe against Putin completely backfired. Sie sind nach hinten losgegangen. Because by cutting off Putin from the SDR, the SWIFT accounts, and from his FX reserves, it just forced Putin and China closer into relationships. It forced them to negotiate with Western countries like Germany and Austria and other countries to buy natural gas in rubles instead of dollars, and to buy oil with Arab states that are now negotiating with China and others to sell oil outside of the dollar. So that weakens the dollar. It weakens the petrodollar, which having no longer been gold-backed since 1976, we're petrodollar or oil-backed. Well, now that's weaker. So the dollar's gotten weaker. It's ironic that you have Olaf Scholz in Germany sending weapons to the Ukraine, but rubles to Putin. It's a very crazy realpolitik situation where it's hard to be virtuous.
But we don't know how this will play out.
We don't.
I mean, the sanctions have started. Putin was surprised, I guess, that there were sanctions against the oligarchs and against him. The question is how weak or not weak is Putin, I guess. So
Right.
you think he's not weak?
I don't know. We'll see. There was a famous line by Condoleezza Rice that Russia will run out of money before the West runs out of energy. She said that in 2014. I don't think that's true. Russia has less debt. And I'm not saying I'm in favor of Russia winning or I'm all pro-Putin. I'm saying we underestimated the strength of Russian debt or reserve money. They have higher reserves than we thought. And the question, we also underestimate how dependent or abhängig Western Europe is on Russian energy. You know, last week or in May, you had Draghi and you had Scholz admitting we're going to have to buy gas in rubles for a while. We can't just boycott Russian energy right now. We can't afford it. Austria, 80% of their oil comes from through the Ukraine. So maybe Russia was stronger than we thought, or maybe our energy dependence was greater than we thought before we started making political decisions. But financially, the dollar is now being weakened, not in relative strength, but inherent strength. The role of the dollar has irrevocably changed. When the U.S. told Russia, we're freezing your FX reserves, the rest of the world said, oh my gosh, they can weaponize the U.S. dollar. Trust in the U.S. dollar is dying. Again, Arab states negotiating with other countries to sell oil outside of the dollar. That genie never goes back in the bottle.
On the battlefield, I think the situation is slightly different. The Red Army, the Russian, very respected army, has not triumphed.
No.
So we all, or at least me, expected that would be a thing of 7 days, and it did not happen. So we'll see what will happen. It's true that the ruble has come back, and of course there is a huge leverage that Putin has through oil and gas. But again, I think this has changed. Well, where we agree is this has changed completely the way how we look at our
currency.
life, at the financial markets, at the planet, and now we go back to the markets. What do you think is the situation right now in that bubble that you described before? No, it has been a bubble that has been inflated through money printing through years. No, like 20, 30, 40, 50 years even. No, where do we stand? Has it already deflated? Has it already exploded a little bit, this bubble, or not at all? Will that happen? What is your scenario?
Well, look, technically, theoretically, intellectually, you could argue that the central banks of the world can prevent a market from collapsing, that there'll never be another collapsing bubble, that this time is different. Diese Blase wird nicht zerplatzen, because the central banks can always print more money to buy more sovereign bonds, to keep bond yields low, interest rates low, and companies revolving their debt forever to buy their own stocks. So technically, if you want to never see another market crash, technically with unlimited money printing, you could do that. But if you do that, you kill the currency. So what are you going to have? A dead currency or a stock? Or a dying stock market? Because if they stop printing money and they stop buying sovereign bonds like treasuries, then interest rates go up and stock markets collapse. So they have a choice between either inflation or an imploding market and a recession. And the only way to keep the market alive is to have inflation. And in my opinion, you're going to have both inflation and a collapsing market. Because I don't think this money printing solution is haltbar. This is unhaltbar. It's not sustainable. And it's too good to be
We have
true.
come to an end. Like we've tried.
You can't time when that happens. How much does a housing bubble have to get before it pops? How much do bad subprime mortgages trade at high levels before people realize they're not worth anything? How long does a central bank have to print money before people realize that the inherent purchasing power is an Abwertung, ihre Wahrung, this debasement of their money becomes offensichtlich klar, because it becomes obvious. And that's a question nobody can time. But more and more people are starting to have a mistrust, this mistrust. That is the key, the mistrust of the inherent purchasing power of these ewige money printing. It's too good to be true.
But so your answer is it has not yet happened.
No, not yet.
The crash has not happened.
Not yet.
Although people talk about bear territory, bear territory, that the market has already entered into that territory, because since the highest point, we have lost 20%. No, that's like the definition.
This has been a terrible year for the markets already. Worst start of a year ever in the stock market, the U.S. S&P. But why? Because the federal bank, the central bank in the U.S., just like the ECB and the European Union, the central bank has been saying before this year that they're going to taper the money printing. They're taking away the Martinis from the party. And the market says, if you take away the Martinis, I'm going to get sick. Because if you take away the money printing, interest rates go up. I can't afford, with this much debt, I can't afford interest rates to go up even 1 or 2%. And so the Fed was trying to fight inflation, but they're not. They're going to pivot. There's going to be a Dreherpunkt. They're going to have to go back to money printing, or the markets will tank. Right now, the Fed is talking hawkish, puffing their chest. We're going to fight inflation. We're going to not print as much money. We're not going to buy as many bonds. They're still printing a lot of money. But the market can't even imagine that the rates could go up. And so that's why markets are starting to tank and bonds are starting to tank. And I think very soon, when they really tank, the Fed will come back in like they've done in 2018.
Martinis again.
More Martinis. More Martinis. Quickly. And they want to see how far they
will that help?
No, because
what will happen then to the stocks? I mean, the investors are not stupid. No, they understand that Martini thing. So there might be a short recovery, but will that be sustainable?
No, my opinion. The question is, how many times can they keep doing this? How many times can they keep using this Zauber, this magic, this fantasy, this Märchen? It's a fairy tale. Everyone knows this. And everyone's still trading to say, well, we'll see. Maybe this time I'll go a little bit more. There's nothing more dangerous right now. There's no greater asset bubble in the history of capital markets than the current stock and bond market. And yet, it can be sustained by money aus dem Luft geschaffen. If you take money out of thin air, use it.
Yeah, but the consequences are harsh. So what is the outcome of all this? You're saying the Fed will come back. Now they talk hawkish, but they will come back.
They will pivot.
More Martini, okay, but it's just like the effect is shorter and shorter. So what is the outcome? Whenever that will be, but a big crash, yes, but what does it mean? New currency system, or what is it then?
The policymakers can't avoid inflation. And what the turning point will be is if they print more money to sustain the markets, even if the markets are getting volatile, the bond markets, the turning point will be when inflation, which is intentional, they want to inflate away the debt. So even if they print more money, they're going to want more inflation to inflate away their debt. What happens is investors, even if the markets are going up, and investors are going to realize that their dollar, their euro, their yuan isn't buying as much as it did yesterday. And you're seeing that with the yen in Japan. They can print money to buy JGBs and Japanese bonds, but the Japanese yen is tanked. The Japanese yen isn't the world reserve currency. It can die faster. But the US dollar is no exception to what's happening to the Japanese yen. They can print more money to support the Anleihe, the bond market, or the Aktien, or the stock market. They can do that temporarily. But eventually, people on the street, whether they're in the stock market or not, are saying, my $10 doesn't buy me as much anymore as it used to. And they lose trust in the dollar.
So that's the outcome. That the US dollar will lose its
trust,
appeal, its trust, and then there will be another currency that is like the leader of the world, or what, the renminbi, or the ruble, or what else, or
how do you measure trust?
Standard, or what is your scenario? What is the new currency system?
I think the IMF has already signaled that. They did this in 2020 when COVID started, and that's a whole other conversation. COVID was very convenient to the stock markets. There was a bigger bailout in the US stock market market under the COVID pandemic than there was in 2008 when we bailed out the too big to fail banks. So it couldn't have come at a better time. The bailout for COVID went mostly to Wall Street. It bailed out the bond market. But already in 2020, under the guise of the COVID crisis, which the IMF compared to World War II, which any of your audience knows is an insult to World War II. There were 85 million people killed in Europe, members of my family, probably your family, anyone who's lived in Europe. We all know the cemeteries are full of a generation from that war. Whatever you think of that war, to compare COVID to World War II in Rotterdam and Dresden and Frankfurt, it's insulting. But yet the IMF was saying, because COVID is as bad, we need another Bretton Woods, like in World War II, a new central bank digital currency, a new reset. This idea that you'll have an e-yuan, an e-euro, an e-dollar, and we'll control that. It's just another magical fantasy for more fiat money, not backed by gold, but could be now. We'll see about that.
A new story.
A new story.
No, storytelling. Okay,
a new
that's
method.
interesting. But if they do that, then again, gold will not be an interesting asset because they just do it.
Right, but I think more and more people are going to realize if you're just replacing a fiat euro with a fiat central bank digital currency and there's no gold backing, not fully backed, 20% linkage, 10% linkage, then I think more investors and markets are going to say, we still don't trust you. All you've done is taken one fiat currency and give it a central bank blockchain technology. It's still useless. It gives you the excuse to create more debt. And I hope by then, and I think many people on Wall Street and the markets from Frankfurt to New York to London to Tokyo will say, come on, you've got to give some...
Maybe you are right, but you don't have an answer because gold... You cannot go back to the medieval time where you had silver and gold coins and some kings who were like using their currency for their own armies. Yeah. We don't go back to these times. So there must be something new. It's harsh. It's difficult to recommend something. The central bankers are not stupid people, of course not. So what can it be then?
I think what we're going to see, and this is something another one of our great friends and colleagues, Ronnie Sturfel, has been talking about, is even if there is a central bank digital currency reset, that won't be orderly. That'll be very disorderly. And you won't have China and Russia jumping into that either. So there's going to be a mess before whatever happens. I think the IMF and the Great Reset and this new central bank digital currency will take some growing pains. But for them, by the time this happens, there'll be such losses in the bond markets and risk asset markets. There's going to be so much distrust that the only way that they're going to have any credibility is to have some neutrality to the currency. Whether China and Russia are in it or not, the only neutral currency is still going to have to be partially gold backed. It doesn't mean 50%, 60 or 80%. They can't. That would send the gold price to the moon. But I think
making strong the core again.
They're going to have some gold backing. And even in the IMF handbook, which has a little diagram of how CBDC or central bank digital currency works, there's gold. So again, probably a 10, 15, 20% backing. That will give it credibility. And regardless of whether that happens, private investors, individuals, as we go through a disorderly reset, it will not be orderly. The pain that's coming for inflation, the pain that's coming in risk assets is not going to be fun. There is no way to get out of this fire, this party, healthily. There is no way. And that's not gloom and doom. You can't live decades on this much debt, spending, and expect it to be easy. There's going to be pain. There's going to be a reset. They're going to blame everything on COVID and Putin. And then they're going to do this new idea. And they're going to have to back it in gold. In the meantime, whether you believe in that or not, if you have some gold, I can guarantee, don't ever promise. My strong belief is that whatever amount of gold you have, it'll be stronger than your kroner, your yen, your yuan, your euro, your dollar, Australian, Canadian, or American. I just know that.
Okay, that sounds more convincing than maybe 2 years ago or maybe even a couple of months ago. The recent things that have happened on this planet, they point to that direction. We'll see. Right. How we get over this. We will get over this. The world always survives. I do. Thank you.
Thank you.
Matthew, very much for this conversation.
My pleasure.
Thank you.
My pleasure. Yeah.